Good morning, y'all. Happy Friday. We made it, y'all. We made it through this amazing week. I'm not even going to say anything bad. Amazing week. And today I am so excited. I have a special guest with me today. And I hope that you guys have pen and paper ready to get all this good information that she is going to give us today, as well as this is the time for, like I said, we're going to be proactive instead of reactive. She's probably going to hit something that hit home. And guess what? We are here to answer those questions. And if you have any questions, feel free to call us at 404-361-1571, and we can answer these questions right online. So, my special guest today, her name is Miss Genie McGee, Mrs. Genie McGee, and she has been in the industry, in the reverse mortgage industry, for about 21 years now. And she began her career in 2002 with Financial Freedom Senior Funding Corporation, and has since held reverse mortgage sales position with several leading lenders, and she serves her clients as a senior vice president at Fairway Independent Mortgage Corporation. So Jeannie, please say hello to everyone and introduce yourself.
Hello, everyone. It's such a pleasure to be here this morning. Thank you, Trisha, for having me.
No problem. And guess what, y'all? She has lived in Atlanta for the past 36 years. So can she say she's an Atlantean, y'all?
Thank you. I got you.
Awesome. So, when Miss Jeannie is not working, she does enjoy reading, exercising, creating art, writing children's books, and traveling overseas for service and mission opportunities. So, Jeannie, I'm going to give you the floor for a little bit and tell us a little bit more about yourself aside from what I already said.
Oh, wow. So I have a degree in design, but I fell into this reverse mortgage space 21 years ago. And I haven't been able to let it go because it's so important and there's so much misinformation about it. So I love the work that I do. I'm passionate about it. It is my calling. It's a ministry of sorts, to help people have a better retirement. That's my goal, to help people have a better retirement.
Love it. And honestly, I will admit that I was one of those people who had the misconceptions of reverse mortgage as well, because I didn't know. And so the good thing about this show, and remember I told you guys I'm going to always be transparent. Um we that's the purpose of having guests like Mrs. Jeannie, is like we want to know the real, not just what someone told us. Oh, my mama them, my cousin them, Pookie, all of them, they don't really know. So
Right.
let's get it from directly from the people who do it every day. And she's been doing this for 21 years. So she's definitely an expert. So we're going to jump right in. Tell us, what exactly is a reverse mortgage?
Well, thank you for asking because there's so much misinformation. Now, the reverse mortgage is a mortgage. It was signed into law back in 1988 by President Reagan. So it's been around for 36 years. It's an FHA mortgage, so it's a government loan, and you can actually go and research it at HUD.gov because it is an FHA loan. It's a loan specifically for folks who are 62 or older, and the difference between a reverse mortgage and a traditional mortgage is that a reverse mortgage has a delayed payment. You're able to take out the mortgage, get equity from your home, and not make a mortgage payment until you die, move, or sell.
Hmm. Wow.
Yeah.
I see. I just learned something new, y'all. I'm gonna be writing notes today too. So, tell us a little bit more about how that works. Like, if who is the person who qualifies for this type of reverse mortgage?
Yes, good question. So you have to be 62 or older. If it's a husband and wife, one of them has to be 62 or older.
Okay.
And think about it. People used to buy houses and then they would have mortgage burning parties when they were in their 60s because they would buy a house and then pay it off.
Mm-hmm.
44% of people go into retirement with a required mortgage payment. So people are
Wow.
not doing those mortgage burning parties anymore. And part of the reason is people are living longer, right?
Mm-hmm.
People are living much longer than they were before, and their biggest asset is their home.
Yeah.
So the longer you live, the more money you need. And if your biggest asset is your home, you have to figure out how to leverage that equity that's tied up in your home to help you have a good retirement. Equity is awesome. I often tell my clients, I love the fact that you have lots of equity, but it's lazy money. It can't be spent. You don't spend equity. You can't go on vacation with equity. You can't eat equity. It's in your house. So the ability to liquidate that is becoming more and more important to people so they can have the retirement that they deserve.
That's awesome. So, what are like the five things that reverse mortgages can actually do for a person? I think you mentioned some of it just now, but what are some, like, what would you say, like, in your experience, when people reach out to you, what are like five things that they're looking to do?
Yeah, we call it the there's so many different things to do with it. You know, we
Mm-hmm.
call it the what's that tool that has all those, the Swiss Army knife. We call it the Swiss Army knife of products. Why? Because there's so many things you can do. But the top things, one is to pay off a mortgage. If you're trying to retire and your largest line item is your mortgage,
Mm-hmm.
right? So it can pay off your mortgage so you can go into retirement without a mortgage
Hmm.
payment,
I
right?
didn't think about that, but
Yes,
that's awesome.
right. So that's a big one. The other one is to supplement income. So maybe you have Social Security. Very few people have pensions these days.
Mm-hmm.
13% of Americans have pensions.
Mm-hmm.
So you need extra money, right, to supplement your income. You can get that money from your home to supplement your income. So you can get a monthly payment if that's your choice. Okay, that's
Mm.
another one.
Hmm.
We have clients who come to us from their financial planner. They have lots of money under management. They're wanting to keep that money invested. So it's a buffer asset so they can keep their money invested and be able to have the equity from their home when they want to go on a trip or need a new roof or other things. There's an
Mm-hmm.
opportunity there to invest more so that you actually have more during retirement and have a bigger legacy.
That's awesome.
There's a couple others that we're seeing. Long-term care, big one.
Yes. Big
People
one.
people are living longer. The longer you live, the greater opportunity there is for you to need long-term care.
Mm-hmm.
Only 2% of Americans have a long-term care insurance policy,
Wow.
and the estimate is that 70% of us will need long-term care at some point in our life. Super expensive. So people often do a reverse mortgage to either buy that policy or to self-fund should they need that long-term care in the future.
Awesome. That is great information, you guys. I hope you guys are taking notes because I am mentally taking notes because I'm like, I myself did not know some of this information that she is giving you guys for free, you guys. Free, great information. So, I want to ask you, what is a story that you can remember that this reverse mortgage actually helped a client tremendously?
So I have so many stories, but I'll use the story. I have a closing this afternoon.
Okay,
Okay.
awesome.
And this is typical. These people are buying a home using a reverse mortgage. A lot of people don't know that you can buy a home using a reverse mortgage. And the reason that's important, the house you buy in your 30s and 40s often is not the same house you want or need in your 60s and 70s and 80s, right?
Mm-hmm.
Often it's too big, it has steps, it has a basement, it was great when you were raising children. But now you're having a hard time getting up the steps. Like
Mm-hmm.
your bedroom may not be on the first floor. Like
Yeah.
so there's issues. So this couple had the same thing. They had a house that was great when their kids were little. Now their kids are gone, won't be coming back, and they needed to sell their house. So they sold their house. They built another house. We did a reverse mortgage on the house they built. And they're bringing a one-time down payment to the table. That one-time down payment is coming from the house they just sold.
Wow.
We're bringing the other amount to the table. We're financing the reverse mortgages. They're going to be in this brand new house without a mortgage payment.
Wow.
It's going to change their life, right?
Absolutely. That is great. So I just had a question for one of my followers on Facebook, and they wanted to know if veterans qualify for reverse mortgages.
Veterans would qualify for a reverse mortgage if they're 62 or older. And we have a new program called the Patriot Reverse that allows anybody who's a vet to get $2,000 off of their closing costs when they do a reverse mortgage with us. So, yes, absolutely. We love serving veterans. Absolutely.
Awesome. So you hear that, Melody? Veterans do qualify for this, and you get some money off by using the program. So this is something that you could definitely look into. And actually, Jeannie, if someone wanted to use your services, what is the best way that they could contact you?
Wow. So these days, there's lots of ways to get hold of me. The best way is just to call me, and that's 404-388-1885. They can also email me, Genie, Genie, .McGee, MCGEE, at fairwaymc.com, or they can go to my website, which is simply geniemcgee.com.
Awesome. And like I said, if you want any questions answered directly at the radio station, the number is 404-361-1571. So let me ask you, because I know I had my own myths too, but what are the myths that persist that you continue to hear about this product?
I'm laughing because they're so frequent. They're almost every day.
Uh-huh.
And it's because we get our information from the street committee.
Yep.
Right? The street committee's telling us stuff. The street committee doesn't really know. Like I said, this is an FHA product. You can find out real good information by going to HUD.gov because it's an FHA product. But people often think they'll lose their house.
Yep.
I hear it all the time. Oh, we're going to lose my... No, it's a mortgage. The likelihood of you being able to lose your house is higher if you have a mortgage payment, especially in a place like Georgia where we have a non-judicial foreclosure method. Because if you can't make your payment for 3 consecutive months, the lender can start making foreclosure on you and not take you to court in a traditional mortgage. With a reverse mortgage, you only have to make your property taxes and your homeowner's insurance every year. That's all you're required to do, and you won't be foreclosed on. So the loss piece, people think they're going to lose their house. Again, it's a mortgage as long as you keep up with the terms of the loan, which is to pay your taxes and your homeowner's insurance.
Right.
Okay. So that's one of them that I hear all the time.
Yep. And I was going to say, I think that's a myth that even with me being a realtor, I've heard in the past. And therefore I haven't recommended to my clients. So it's good to get this information to really know what's out there. So I talk about this often, how us as realtors, we have to continue to educate ourselves. And one of those things is to give you guys great and good information that can really help you, because it sounds like your today's closing, that's going to be a life changing. I want to have no mortgage. But I definitely don't meet the qualifications just yet. But you know what I mean? Like, that is an amazing tool that is available. And sometimes you're right. A lot of times you're right. The biggest asset that you have is your house. So to be able to tap into that, to just better to have like a better way of living or better way of retirement, that's amazing.
Yeah, people often also think that they can't have their kids inherit the home when you have a reverse mortgage. That's not true. The biggest thing that keeps people from their kids inheriting a home is them not having their estate plan done, right? Not having your will done, not having a trust done.
Yep.
That's the biggest thing.
Yep. We talked
Again,
about this, y'all.
it's a mortgage. So we don't hold title to the property. You do. You hold title to the property. You don't give up title. And so the way that property is passed on from generation to generation is only three ways, either through a will, a trust, or through probate, right? Probate determining it. So when you have a reverse mortgage, your heirs will inherit the property. They will have to pay it back. And usually the way they do that is they sell the house. Very few heirs actually keep a house. It's interesting because we talk about I want this to be a legacy home. I want my kids to inherit it. Only 1 in 200 kids ever keep a house, right? Ask your kids if they're going to keep your house. Because how do you divide a house amongst 2 or 3 or 4 kids, right?
Right.
You can't, but you can divide money all day long, right?
Yeah.
So often planning helps you, one, to have a better retirement, but also to plan so that your kids will have other things. Like you can pass on assets, you can pass on insurance, you can pass on that 401k that you didn't spend because you're using your housing wealth. Like there's opportunity to build your wealth using this product so that you have not only an efficient retirement, but you pass on more assets to your legacy.
Right. Okay, awesome. So when we come back from break, we are gonna talk about, so we know the pros, but let's be honest and talk about some cons that may arise. We talked about some of the benefits, so we'll kind of recap. We want to recap on that, and you already kind of touched on estate planning, and this is something that we talked about on the show before about estate planning, knowing, okay, if something happens to me, God forbid, what's happening to my house, what's happening to the, like she mentioned, the retirement that I have. Do you have, you know what, it's so funny because earlier this week I went to a meeting, and the meeting said, we talked about how people may sometimes have all this stuff together, but nobody knows where it is.
True.
So let's put it somewhere where we know where. Let's put it somewhere, and not only you know where it is, your people that you're leaving it for, they know where it is as well. So when we come back, we'll discuss more. Talk to you soon. All right, y'all, we're back. All right, so we talked about the pros of this program. Let's be honest and talk about some cons that someone may consider a con.
Of course. There's a couple of them, and I'm honest about that. One of them is it's a more expensive loan, right? And the reason it's more expensive is because mortgage insurance is built in to the product, and that mortgage insurance is 2% of the value, right? So if you have a $400,000 house, 2% of that is $8,000. That's a big amount, right? It's paid at closing as part of the closing costs, but that mortgage insurance is important because there's no way we could lend out money, not require a monthly payment, and not know when we're going to get it back without something there protecting the investor,
Right.
right? So that's one. It's more expensive. You can get a HELOC or other loan much less expensive, but you have a payment. It is the only loan out there that doesn't have a payment. Okay. The other thing that makes it, that could be a con, is that if you have a home that's been in the family for many years, and you're planning to for your daughter, say, to get the house, you don't want to put a mortgage on it. Certainly not a reverse mortgage. Why? Because she's going to have to pay that off when she inherits it. What if she doesn't have the ability to pay it off? They could foreclose on it, right? And she could lose the home. So when people have homes that are what we call legacy homes, I always want to have a really thorough conversation with the borrowers and their heirs to make sure they understand what they're trying to do, right? And then the last thing is, because there's no required payment, the balance grows if you don't make payments. You can make payments into reverse mortgages, you can, but most people don't, right? And so the balance grows. And some people worry about that balance that's growing it can never be upside down, but it does eat up the equity over time, right? You're spending equity, right? And it's eating it up. So those are the three cons that I hear about and talk to people about.
Hmm. Yeah, so it's a con, but I still feel like the pros kind of outweigh the cons based on those. But it also depends on your
Right.
situation. It
Right.
does. It does depend on your situation. But a lot of the things that you said on the pro side, I feel like a lot more people qualify for that more than on the cons. You don't have that many people on that con side, especially because you said that they can still inherit a house, but just a different way. So,
Yes, they can still inherit it. It's not a different way. It's just the same thing. They just have to pay off the mortgage, right? And by the way, if you have a traditional mortgage, you got to deal with a traditional mortgage when you inherit it too. It
anyway,
doesn't go
right,
away. Mortgages don't go away just because people
right,
die.
right. I had this conversation earlier this week
Right,
too.
right, yeah. People don't know that, right?
Right,
Yeah.
right. Just yeah, it's still the money's still due.
Yep, yep,
They mortgage companies still gonna want their money. Lenders still gonna want their money,
yep,
even if it's a delay.
yep. Absolutely, absolutely.
So let's talk about what are the qualifications um, to actually qualify for this program.
Yeah. So there are four qualifications. Really easy. It's easier to qualify for a reverse mortgage or what we call the home equity conversion mortgage. That's the formal name of the product. It's a home equity conversion mortgage. Okay. The first qualification is age. We already talked about that. Somebody has to be 62 or older. If it's a husband and wife, one of them has to be 62 or older.
Hmm.
Second one, you have to have equity. Okay? So you have to have equity in your home, and equity is just a very simple calculation. The market value of the home minus what you owe on it. Not the tax value, not the Zillow value, not what you think it's worth. It's the market value of the home, what a buyer would be willing to pay for it. A qualified buyer would be willing to pay for it minus what's owed on it. So you have to have enough equity such that if you're doing a refinance, you can pay off that mortgage.
Hmm.
Or you have to have enough equity such that if you were to sell it and you wanted to buy a new house, that you have enough equity in your net proceeds from the sale of the house that you can bring your down payment to the table for the house you're buying. Okay? So equity is the second one. Third one is payment history. We don't use a FICO score, Trisha, believe it or not. We don't use
Hmm.
FICO scores,
Wow.
right? So it's easy to qualify. We do have a definition for what's considered satisfactory credit,
Hmm.
but it doesn't include the FICO score. So we
Wow.
look at satisfactory credit as, have you been able to pay your obligations on time for the
Right.
last 2 years?
Wow.
Yeah,
And only go back 2 years.
2 years, two
Okay.
years.
That's good information.
And then the last thing that we look at is whether or not you have enough money monthly to pay your taxes and insurance. And by the way, that bar is super low. For one person living in the Southeast, you only have to have $529 in residual income. Very low bar.
Wow.
Yeah.
Those are not like strenuous, guidelines as some other products out there. So that's really, really good.
Yeah. Yeah. It's very difficult to not be able to qualify. We turn down very few people.
Mm.
Our acceptance rate is like 98%.
Wow.
Right. So if you're
Yeah.
interested, and even if you don't have enough equity, often if you just wait a bit, as the rates go down, the older you are with this product, the more money we're willing to lend. So sometimes I'll
Mm.
tell people, you're so young and the rates are higher. Let's wait a couple of years. Your mortgage will be lower. Your value will be higher. You will be older. And if the rates go down, you're going to qualify at some point. Yeah.
Mm. So we only have a few more minutes left in the show. What are some takeaways that you hope that everyone listening will kind of take away from the reverse mortgage product?
My biggest takeaway, Trisha, is that people would get the information. Uh, it- you know, you don't make big decisions, but certainly not financial decisions based on what you hear, your best friend's boyfriend said, or your church members, your pew sitter at church that somebody told you, or somebody told you a story. You don't make good big decisions and good decisions based on that street committee.
Mm-hmm.
Get good information, and then you can make good decisions. That's the biggest takeaway.
Yeah, absolutely. And you're correct. Yes, that is the biggest. Don't just go by what we talked about today. You can look it up, like you said, yourself to see if this is something that will benefit you. So this is definitely informational, but I also feel that there are a lot of people who, like me, didn't know like the benefits of this program. So before we end for today, please, Jeannie, tell us how we can contact you again.
Yes, you're welcome to reach out to me via phone 404-388-1885. You can email me, Genie, that's GENIE dot McGee, MCGEE, at Fairway, that's FAIRWAYMC.com. Or you can go to my website at GenieMcGee.com.
Awesome. And I just want to say thank you so much for waking up early with me and joining the show and speaking to everyone. Everyone, I hope you guys have a great week. You guys already know that you can call me directly as well at 678-849-4734. And I would love to answer any questions that you may have. And if we are going to partner with Jeannie, let me know as well. And have a great week. And I will see you guys next week, y'all. Happy Friday.
Happy Friday. Thanks.